Hello, I hope this message finds you well. I wanted to take a few minutes and explain some of the things we're seeing in the markets and the economy overall recently, and talk a little bit about a few things. This year, the markets have been difficult, no doubt in that. It kind of reminds me of a car ride with the kids. Are we there yet? Are we there yet? Are we there yet? And that question keeps coming up from a few different angles. Is the market at a bottom? Is inflation peaked? Are they done raising interest rates? Are we there yet? Or do we have more to come? We don't really know the answers to some of those questions, but I'd like to offer some insight as to what we're looking at in regards to that. So the first slide that I'd like to share with you is this slide from Boya that shows growth in companies. And this shows right here that growth is slowing. And this is as of the end of June. But it does still show that there are positive growth returns, earnings for companies. This is important because that's one of the key indicators to know if we are in fact in a recession or not. Currently, it doesn't look like we are in a recession, but the market and the economy are two different things. Another piece that I would like to share is the slide from University of Michigan and JP Morgan. This talks about consumer sentiment. Consumer sentiment is at an all-time low. You can look back and see some of these time frames where these troughs, these 8 previous troughs through 2008 and 11 and 80 and 75 here, and you can see some of the other peaks that have happened. The reason I show this is not to say, hey, we're at all-time lows in consumer sentiment, but to show you this piece here. And notice that the 12-month average return of the S&P 500 after one of those troughs has averaged 24.9%. After one of the peaks, the 12-month average S&P 500 return has averaged about 4.1%. So while we can't guarantee returns and history can't necessarily always guide us in returns, we could hopefully use it as a guide mark to say potential days, better days are on the horizon. So I'm optimistic for that. This year has been a difficult year to follow any trends. There really hasn't been many trends in the market. And so it's been difficult to find areas to take advantage of, if you will, for some of the managers and the mutual fund managers as well. And so one thing that we look at often is this chart here, and I like it because it's colorful, but also because it has a lot of information in regards to which asset classes are performing best and when. And as you notice, the different colors are spread across the chart in different areas for different years. And what that means is that in times, especially like this year, being diversified, reviewing your allocations, making sure that your risk tolerance is in line with your comfort level is important. And if you look here, the white boxes along the way kind of hover around the middle, and that's the asset allocation, which means that you had a fair amount of mix between different types of asset classes. And that's the one that you will see perform consistently in most cases on this chart. And the reason for that is because it's made up of a bunch of different asset classes. Good things to do in this market environment are to review your asset allocation, review your risk tolerance, and if you need to do those or you have questions regarding what's going on in the market, please feel free to give us a call. We'd be happy to talk with you or do a Zoom meeting or even an in-person meeting if so desired. And we thank you for your time and we appreciate you very much, and we'll see you soon. Thank you.